Morning, everyone. First of all, let me introduce myself. My name is Rijal, and I'm the one of the student executive management business of administrations from IPMI International Business School. So today, with a great sense of excitement and privilege, I want to share about my mapping from class corporate finance with Professor Engineer Roy H.M. Sembel, MBA, Ph.D, CSA, CIIM, and CIIM from the IPMI International Business School. In the next few moments, I will explore about the mind mapping concept from corporate finance. And now let's begin the exciting journey from our class together. So the objective of the class is about giving the students knowledge about problem solving skill in corporate finance of internal and external point of view. So the expectations of the class first is about the financial management, how to explain the important financial management decisions interlinked among them. Second, analyzing the financial problem, applying financial management decision-making tools. Third is about the financial value, how to explore and evaluate opportunities to create financial value to firm and investors. Fourth is about the logic of corporate finance, how to utilize the logic of the thinking of corporate finance to improve participation decision in other business-related situations. Last but not least, it's about demonstrates ability discussions in a structured way how issue that emerge in the business or the finance media. So these are the agenda of the course. It's about the financial management, time value of money. Secondly, is a capital budgeting. Third, analysis of the securities, portfolio investment. Fourth, a capital structure and dividend policy. Fifth is about the fraud risk management. Sixth, international finance. And lastly is a summary of the class. So let's begin from the financial management discussions. So the financial management consists of the first key elements is about the value creations, principal agent problems, good corporate governance, 5 minutes incident from the Ramcharan. Financial management is the effective handling of money through planning, organizing, directing, and controlling funds in a corporation or for individual. Financial management uses ratio, equities, and debt to reach investment goals. So let's start from the value creation strategy. The value creation strategy may be founded by reinvesting retained profit into the company or raising new capital from the equity or debt holders. New capital raise may be more times, may open to greater pool of capitals, and help a business retain require liquidity levels. So value creation consists of the return of investment, return on equity, profit margin, and also cash flow. Next is about the principal agent problem. Relationship is often defined in form terms described in a contract. For example, when an investor buys share of an index fund, he is the principal and fund manager becomes an agent. So the principal agent problem consists of the three things. It's about the conflict of interest, asymmetric informations, and also moral hazard. Third is about the good governance, corporate governance. Good corporate governance consists of the 5 elements. It's about the transparency, accountability, responsibility, independency, and fairness. Good corporate governance is the framework that allows control the educated directions of the people, policies, and procedures of an organization in order to achieve its strategic goals. It is the set of action intended to ensure that not only does the business strategy have a clear purpose, but it also considers the environment and act based on ethical culture founded on a value and principles. Good corporate governance means leaders are aware of the impact the company generates on its stakeholders, have the capacity to respond to stakeholder needs, and are always prepared to face the various challenges that the future may bring. So, fourth is about 5 business essentials from the Ramcharan. 5 business essentials from the Ramcharan consists of the 5 things. It's about cash, margin, velocity, customer focus, and also growth. From the Ramcharan 5 business essentials, the first one is about cash. Cash is a king. In business principle is very much true. We have to have cash, and nowhere in our business do we generate cash. A business model is only effective if all members of the organization know how to generate cash or source cash in this particular business. Secondly, is a margin. You have to create very good profit margin to make a profitable business. Profit margin is gross sales less cost, and a sustainable business creates a good profit margin. Third is a velocity. This is about cash flow. Velocity indicates that the cash that goes into your company must be faster and greater than the cash that goes out of your company. There are a lot of stories of business that show why even if the company has a great product and service, is the cash going out is greater than the cash going in, then it eventually falls out. Third is about growth. There must be a sustained growth every month and every year, but caveat, it must a profitable growth. This can only happen if we innovate our product and service. If we become complacent, this will spell the end of our company. Last, about customers. You got to know your customers. If you do know why they buy your products and service, you will not able to create repeat business without it. This will give you a big problem in the long run. Successful companies understand their customers according to the Ramcharan's business essential. Next is about the capital budgeting. Capital budgeting consists of the net present value (NPV), internal rate of return (ERR), and also profitability index and payback period. Capital budgeting is a method of estimating the financial viability of capital investment over the life of the investment. Unlike some other types of the investment analysis, capital budgeting focuses on cash flow rather than profits. Third is about the security analysis. Security analysis consists of the fundamental, technical, and risk volatility. Fundamental: domestic and global economic analysis, industry analysis and benchmark, company analysis, historical trend. Technical is also momentum versus reversal, trend up or down trend, support, gap, triangle, moving, and average. Risk volatility is about the capital asset pricing model, systematic risk, beta value, overall market risk. Security analysis is the evaluation and assessment of stock or securities to determine their investment potential. It involves analyzing various factors such as financial statements, industry trends, market conditions, and the company's specific information to make informed investment decisions, monitoring, performance evaluations. Fundamental is an intrinsic versus market price, financial analysis, and the bond analysis as well. Fourth is a capital structure, long-term source of fund, or the financial structure. So what is a capital structure? Capital structure is the particular combination of debt and equity used by a company to finance its overall operation and growth. Equity capital arises from ownership shares in a company and claim to its future cash flow and profits. Capital structure consists of debt versus equity, Modigliani and Miller theory, and also optimal capital structure and dividend policy. Fifth is about the fraud risk management. Fraud risk management consists of the investment fraud, fraud triangle, and whistleblower mechanism. Fraud risk management is the process of identifying, understanding, and responding to fraud risk in an organization. It involves creating a program to detect, stop, or prevent both internal and external fraud for an organization. Six is discuss about the international finance. International finance is the study of monetary interactions that transpire between two or more countries. International finance focuses on areas such as foreign direct investment and currency exchange rates. Increased globalization has magnified the importance of international finance. The international finance consists of the foreign exchange market, inflation rate, forward versus future markets, option, and arbitrage strategies. Lastly, from the class, the summary I took from the one of the CEO quote. As we reach the end of this presentation, I want to extend my heartfelt gratitude to each and every one of you being a part of this exciting experience. The engagement, enthusiasm, and thoughtful discussions throughout this journey have made it truly exceptional. So today, we explore the mind mapping from the corporate finance. The summary of the we believe in giving 110% by closing the loop on investment management and using the latest technology, we help business grow and expand their portfolio funds. We thrive because our market knowledge and great team behind the products. As our CEO says, efficiency will come from proactively transforming how we do business. So together, we have delved into the interstices, confronts challenges, and embrace the diverse perspective that makes this field so fascinating. So, lastly, I hope this presentation has ignited a spark within you, a spark of a curiosity, a spark of inspirations, or perhaps a spark of creativity. Our aims was not merely to transfer information but to foster a passion for learning and discovery that extends beyond these rooms. Let me take a moment to appreciate the collaborative effort that has made this possible. I would like to express my gratitude to my dedicated to my mentors, advisors, and everyone who supported. Once again, thank you for your attention and participation. It has been an honor and privilege to explain my mind mapping today. As we step out in the world, let's remember that knowledge is a power. And by sharing knowledge, we empower ourselves and those around us. Wishing you all continued success and future filled with meaningful discoveries. Farewell and until we meet again. Thank